Good morning, everyone, and welcome to BGA's Tuesday Morning Coffee Talk. These are weekly sessions where we will be providing industry insights to agents. We share product updates, market trends, policy changes, and marketing that will help agents find the sales to grow their business. We post these every Tuesday on YouTube before noon and for our listeners on your podcast platform of choice. My name is Trent Zimmermann. I'm your host, and this week we're joined by Travis Fratini of NIW. It's good to see you again, Travis.
You too. Thanks, Trent.
So we got to talk last week, and let's just take it from the top. I want to take a brief moment to get everyone up to speed on how you got into the life insurance business.
Gosh, no one goes to school for this.
No.
I went to school to be an IT guy, and I got my computer science degree back years and years ago. And I ended up working for Pacific Life as an IT help desk person in Newport Beach. And
Wow.
I traveled all over the country with a lot of these agents. And I released the very first BlackBerry phone to Pacific Life wholesalers. And if anyone remembers BlackBerry. And so I was on the road with these guys, and they seemed to be doing much better financially than myself. And I go, what do you guys do? And what do you make? And I can't say it was all about the money, but man, it was interesting what those guys made. And they said, you should get your insurance license and come out here and work with us. So lo and behold, I went and got my insurance license, and I started out as an internal wholesaler for the variable annuities and mutual funds division at Pac Life. And that was
Wow.
the start of my career. And then kind of evolved into working for an IMO. And then I ran a life annuity and long-term care division at an IMO in San Diego for about 13 years. And that's how my kind of career evolved. And then how I got into NIW and was introduced to NIW is that Grace and Dane and the NIW team were my premium finance vendor when I was at the IMO in San Diego. So I knew the NIW team for a long time before I ever started here as an employee at NIW. I had the chance to market and kind of introduce KaiZen to agents close to 10 years ago. Because the platform, remember, KaiZen's only been out for about 10 years now. So I was at the infancy when it first started about 8 years ago. And that's how I started really getting into how amazing KaiZen was. I will tell you, it took me a while to really grasp how amazing KaiZen is and how different it is to traditional premium financing. And I always thought that premium financing was only for a very elite group of client and agents that had that elite client. And what KaiZen did is open my eyes to the fact that this now is an opportunity for what is a $200,000 household income. And all of a sudden, what was only good for the 1% now is good for 10% of household incomes in the United States. And before you knew it, I couldn't stop talking about it. Once I grasped it, it was all over. So that was my journey into the insurance industry and then into the NIW role.
Wow. Well, so NIW being a premium finance platform, you worked with them on the wholesale side. Now you're working with them. You've seen their run from just premium finance to developing KaiZen. What makes you guys unique as a premium finance platform?
Well, if you go back 25 years when NIW started in 2000, 1999, 2000, we initially, NIW, Grace Bernard, the president, she was the second largest independent broker dealer in the state of Texas. And she was introduced to traditional financing for her very wealthy clients by an outside insurance company and vendor. And she loved the idea of it. She thought this was amazing, but she didn't quite feel like the risk at which then they were taking was for her customer. But if you get to learn about Grace, once she liked something, she wanted to figure out how to make it better. And she found ways of de-risking the traditional platform for her clients. And she ended up being very successful at that. Well, guess what? The banks that saw that success said, well, do you have any more clients? And she goes, no, I don't have any more clients. Well, how do we keep doing this? And that was the start of NIW. She went out and said, well, wait a second, there's a lot of advisors that have clients. Why don't we take this lending platform out and just work with independent insurance agents? And that was the start of NIW and the breakaway from her broker dealer. And they did that successfully for about 10 years prior to KaiZen. The average customer that NIW worked with back then was about a $50 million customer or higher from a net worth perspective. One of the unique things that NIW did in the early years where it was not as common, and what really made us different, Trent, was probably the stress testing. Trying to find out where this thing would fail, where the client would experience the most pain in regards to collateral or performance. And so we got very well known for that analysis. Something else that NIW, I think, really prides itself on is the long-term servicing. To date, now we have about 40 employees, 70% of which are servicing and administrative support, not sales, which seems kind of funny for a company that prides itself on that sales side. NIW equally, or probably more importantly, sees the long-term servicing more important than even my job. Because we got to keep these things going till the loan gets paid back. So that was a big differentiator for NIW, is that we put a servicing model in place to stay with that client, whether the advisor was there or not. 20 to 25 years out, you could have someone retire, pass away, and your client still has a servicing partner. So that was probably our differentiator back in the day when we were getting started. And then I'm not going to go into, I know you have more questions for me, but then when KaiZen came around, it really changed who we were.
Well, that's a good lead in, because KaiZen's been around now for about a decade. And I just want to know, from a bird's eye view, for those who don't know, what is KaiZen?
So KaiZen, we decided to kind of coin the word hybrid financing. It's not traditional premium financing, because with KaiZen, instead of going out and borrowing the money directly from a bank and taking on 100% of the collateral risk, we are no longer, this program doesn't require the client to actually apply for that loan. So KaiZen was really created for individuals that needed access to leverage for the purposes of tax-free distribution, not so much big death benefits for estate tax planning. So we kind of, instead of helping the client with the estate planning, we saw a really big niche for people that just weren't saving enough money. They were making good income. They were making 100, 200, 300,000 a year, but they just didn't have enough to save to maintain lifestyle in the future. So we decided to use leverage for accumulation versus for big death benefits. And so that's why KaiZen was created. If you look back, and Grace was looking back at why she created KaiZen for her, by the way, something interesting about the history of KaiZen, we never believed we were taking this out to market. Grace actually created this program for her family and her employees as a better benefits package than she was offering her own employees. And she couldn't find that perfect plan until she goes, wait a second, what if we could provide leverage for these ones where they didn't have to borrow the money directly from a bank? They didn't have the same risk profile. We provided them with living benefits that some of these carriers offer. So they get the chronic illness and the terminal and the critical. They have a supplemental retirement plan right outside of the 401k. She goes, this is the perfect employee benefit for the right person. And so it started with that. And so she took 2 years for her to create it with her banks and her lenders and the trust company. And lo and behold, we filled up our very first tranche. And I think we're going to get into what tranches are in a minute. But that first tranche led into all those people telling other people. And before you know it, we had tranche 2. And those people told more people. We had tranche 3. And Grace goes, maybe we've got something here. And she took it out to the advisor base. So KaiZen did not get created initially to have a program for our advisors. It was for her. And then she saw how good it was, and we took it out to market. So
you mentioned a little bit of this works well for people in the $100,000 to $300,000 income range, household income, who need to save more for retirement, need some of these lifelong benefits. This benefit side is a new thing for me. So, so when does that concept work as a benefits plan?
Okay. So who does it work for? Let's go to qualifications.
Yeah.
Individuals primarily that are buying KaiZen are between 35 and 55 years old. These individuals are earning in the neighborhood of $200,000 or more a year, and they tend to have a net worth of about 5 to 700,000. So if you were to ask me who our average customer is, that's who it is.
Right.
35 to 55 earning 200,000 or more a year with about a net worth of about 700,000. Now, that's the qualification, right? That's what we're looking for. Our lenders and the carriers are looking for to qualify for KaiZen. What kind of benefits do you get out of it? Well, this is nothing more, Trent, than a max funded IUL design. So we're max funding it to the we're doing a minimum death benefit, maximum accumulation solve. We're actually funding this up at what's called a guideline annual premium. We're max funding it right below MEC. We're adding a little term in there so that we can keep costs down, and we're utilizing it purely for cash accumulation.
Mm-hmm.
So that when approximately the 15th year, that cash value will pay back that lender on this hybrid plan, there'll be enough cash left over where it will increase the tax-free distributions and retirement by 60 to 80% more than if we had not used leverage at all. So this plan allows us to get access to the capital that our clients need that they don't have on their own. And that extra capital gives them a lift in regards to tax-free loans by 60 to 80% more than a non-leveraged plan. So, and what's great about KaiZen, so why we call it hybrid, is the client's only putting in 5 premium payments, right? Everything that we're selling today, and I know a lot of advisors are listening in doing IULs, they're selling 5, 10, 15, 20 pay plans. Well, let me just tell you statistically, if you put your client into a 15 pay IUL, they're not paying all 15 years. Statistically, they will not and do not pay that. With KaiZen, the first 5 premiums is all the premiums that are required from the client. Those premium payments that the client pays are matched by a lender for the first 5 years. So if I'm putting in 50, the bank's putting in approximately 50 every year for 5 years. But when I'm done with my 5th premium payment, the lender is taking over the additional 5 premium payments. So they're going to put in $100,000 in years 6 through 10. So 5 from the client, ultimately 10 from the bank, and the bank's covering 75% of those premiums. The client's only covering 25%. So what does that do for a client? Well, one, we have a 96% persistency rate. Why? Because 5 years, they're done. We have a 20% repurchase rate, which means after year 5, they're buying another one. And it gets them closer to their retirement goals than if they weren't to use leverage at all. So that's why this is so powerful. It's getting those high income earners that are starting to save later in life closer to their retirement goals.
So you mentioned a piece there, and I want to skip ahead and we can kind of backfill from there. Why would a bank match the payments and then pay the remaining? What's in it for them?
Yeah, why would a bank do this at all?
Yeah.
And let's just face it, they're not necessarily charitable groups of individuals. Banks need to make money, right? And so, but they make money at various spreads depending on the risk profile at which they're lending to, right? So, you know, if you're going to go, what are prime rates on a credit card right now, Trent? 29.99%. Look, that's a terrible risk for a bank. That's why they're going to charge you close to 30% for that Ruth Chris dinner. On the pendulum, on the safety side of a loan would be maybe, let's say, a mortgage, right? You got a much better rate on a mortgage. Even a safer loan to a bank, believe it or not, is life insurance. At least the way that we design it. And why do I say that? Because banks see the cash value and the ability for policies to grow at a higher interest rate than what they're lending to it on average. And we were able to show that to a bank. Hey, these IULs over 15-year periods of time will earn about 2% more than what you would lend the money to us for. And historically speaking, that's accurate. The banks know that. So when you design these IULs with a lot of cash value and low cost, that lender goes, hey, we can give you a really good loan and a spread on that loan because of the safety of the IUL. So what they're banking on over a 15-year period with KaiZen, that they're going to earn about 1.65 to 1.75% on top of a 1-year rate. And that margin is very, very good for a safe asset. So they're doing it because they need the money. There's no doubt about it, but it's a very safe place to lend and to get them a rate of return that they're very comfortable getting with that asset class. So they're not doing it because they love us. They're doing it because it's a place to make some money, but it's a place that they feel very comfortable lending to.
Okay. And so I know that you get competitive lending rates for a
Yeah,
typical Kaizen, which is impressive because it's a lot smaller than a traditional premium finance case.
right.
And you're talking about that safe investment for the banks. So I
Yeah.
think this might be a good lead in for you to explain about these tranches that you do.
Yeah. So the tranches basically allow us to get the pricing on the loans that you're talking about. So in traditional premium financing, we're usually going out and borrowing $1 million, $2 million, $5 million per year for some of these large policies. And you can get good rates for a $2 million loan. How good of a rate can you get for a $50,000 loan? Probably not very good, or a bank wouldn't even talk to us. What we do, the way that we are able to get the pricing is that instead of going out and getting individual, we might call them micro loans, we're going out and tranching business. So about once every, about 8 times a year. So once every 5 or 6 weeks, we're bundling let's just use 50 cases. And let's just say those 50 cases came in at $50,000 per year. Well, that's $5 million of premium going into these Kaizen plans. We go out and borrow a $5 million loan for these 50 clients that are putting in $50,000 individually. And we call them tranches. So we're bundling, let's say, hundreds of clients together to go get access to large loans to give us the pricing as if we were borrowing $5 million. And we get to pass that discount or pricing on to individuals because of that one big loan versus 50 individual loans. And that's what gives us that power to go and provide loans that you could never get on the street for an individual $50,000 policy. Yeah, it's very unique.
And so you're able to create these then without loan docs because of these tranches that you're doing?
Yeah, so that's another really good differentiator between us and anyone in the industry. Just to let you know, Trent, we don't have what I would consider a true identical competitor in the market. There's a lot of illustrations that kind of look like ours.
Yeah.
They're very, very different. And we don't have to talk about whether they're right or wrong. We're just going to say that they're very different. What makes KaiZen still totally unique in the industry today, and the reason why your client isn't on the loan or applying for a loan, is because we are using what are called borrowing trusts. So these tranches are a part of individual trusts. And we have we set up these 8 borrowing trusts every year, and the trust is borrowing the money on the behalf of the customer. As a matter of fact, your customer, Trent, doesn't even know what bank we're using. And by the way, we might use 2 or 3 throughout the 15 years, but there's no direct relationship or recourse relationship with the bank. And we've set this up and the reason why would a bank provide leverage to a bunch of people they don't know or have a relationship with?
Right.
It's because that client we are setting up with that client an individual KaiZen trust. So every one of our customers gets their own living KaiZen trust. And it's tied to that borrowing trust. And what I mean tied is there's an assignment. The client's not setting up a beneficiary that goes to the bank or anything like that. It's purely a first collateral assignment that says, hey, if this client passes away, first the death benefit goes to the trust that borrowed the money to pay the bank back. If my client surrenders, we first take the cash value to pay back the bank, and then the client can leave with whatever's left over. Or if the client makes it out to year 15, we take a policy loan against the plan, pay back the trust who pays back the bank, and now the client's out of that relationship completely. But there is no direct relationship with the bank. The policy is the sole collateral for the loan, the sole collateral. So this really keeps the client away from what would be traditional borrowing. Not a single loan in the industry is structured like that except for KaiZen.
Well, you guessed my next question about competitors out there.
Yeah.
And you're right. We won't get into where they're right or wrong.
Well, and
But
let me tell you
they're
what the
just different.
competitor's doing so that
Yeah.
you understand, right? Because there's nothing wrong with it. There's
Right.
absolutely nothing wrong. The difference, what our competitors are doing is even on these smaller cases, they're actually borrowing the money directly from the bank. And they actually have to take sometimes a single larger loan to cover those 5 premiums, which is fine, but the pricing is not going to be the same as ours, right? Because
Right.
we're borrowing much more. So it's a different way to kind of try to compete with us, which is fine. But to keep everyone on the call today or listening in on this call, that client has a direct recourse relationship with the bank. No matter what the illustrations shows, they're applying for the loan, right? This loan does not exist in that client's credit, on their credit, on anywhere in the borrowing world. This loan does not exist in their realm.
Hmm.
So that is again why so many businesses and individuals that understand the power of leverage but just don't want the borrowing risk, they love that KaiZen story.
Awesome. And so you have a lot of bank partners,
Yep.
but you only have 2 life insurance partners. That's
Yep.
National Life and Allianz.
Yep.
How'd you end up partnering with them?
So we actually have a couple more carriers. They're just not inside of ILIA. And we'll talk about ILIA, I think, at the tail end of our call today. A National Life Group was the first carrier that we went to with this idea. And partly because remember the story of the owner wanting it for her family and her employees. She was so enthralled with National Life Group's living benefits back in the day. They were the pioneers on that. A lot of companies ultimately copied National Life Group and have their own living benefits. National Life Group really were I would say, the premier carrier for that kind of dialogue. And her family has a lot of critical illnesses that she thought, wow, to have benefits like that for advisors and their clients would be incredible. So National Life was the first partner that we went to and said, hey, can you do this on your platform? And after a lot of vetting, they said, absolutely, let's do it. They were on our platform for about 4 years before a lot of agents were going, well, what about Allianz? Allianz has got a great IUL, very well known in the industry for their FIAs and their Life Pro product. And really the advisor pushed Allianz more than us. We tried, but the advisor said, we want to sell KaiZen, but we want to do it with Allianz. And after about 12 months of harassing leadership over there, they said, yeah, let's get it on the platform. Now, we had already been doing traditional financing with Allianz, so they knew who we were. As a matter of fact, they have some of our largest blocks of business, but they just hadn't adopted KaiZen yet.
Yeah.
And so after about 24 months of vetting, Allianz came on board. They have been an incredible partner as well. They don't have the robust living benefits that National Life Group has, but they're great IUL. We've got some newer relationships we're working on, Trent, that you might see come on board in the next 24 months. So we will probably add about 2 or 3 more carriers over the next couple of years.
Awesome. And just for context, I think it's getting posted today, but on Friday, we interviewed Mayron from National Life, and he is very proud of these advanced sales projects and the living benefits they've done. So
yeah,
it's a good relationship there.
It is an incredible relationship. Yeah.
Now, Allianz specific, they've changed how they handle payments with you guys.
Yeah.
And so what's changed and how's this open up more opportunities for you guys?
Well, KaiZen has always been an annual pay program. Part of the reason is that when your client puts in, let's say they're 50,000, that is kind of the down payment or the security for the lender to put their 50,000 in, right? And so it required an annual premium to get started. Well, National Life Group and some very smart people at NIW figured out a way to, instead of going into KaiZen with annual, they are allowing now monthly payments to start the program. So ultimately what's happening, Trent, is the client has to pay their first 2 monthly payments up front. That is their down payment or the security for the lending that comes in on top of it. So again, let's just say it's a $30,000 monthly payment. They have to give us 6 up front. The bank puts in the other 36 on top, and then the client pays on a monthly basis for the rest of the 5 years. That is game changing. There is, again, not a single finance company in the country that has a monthly pay program with a leverage strategy. Not one in the industry. This is great for businesses that pay, that want to support their management or executives. They don't want to do it annually. They want to do it monthly. This also just helps with people that budget monthly, that pay for their bills monthly. They may not have that $50,000 check, but they can divide that by 12. So this is the advancements that we've made over the past 10 years with this. That's probably one of the bigger ones. That was a very exciting launch.
Awesome. Well, I want to get into stress testing, but there's one more question here that I want to get out of the way. Nevada, all your cases are done in Nevada. Why is that?
Well, there's 2 reasons. But the primary reason is that the trust company that we chose is domiciled in Nevada. But more importantly, Nevada has very, very favorable benefits to life insurance and annuities when owned in the state of Nevada. Nevada law protects the cash values from creditors and bankruptcy inside of those life insurance policies, where other states like California, they're not so friendly to cash value life insurance in regards to bankruptcy and or creditors. So to have your policy owned by a domiciled trust company in Nevada protects life insurance cash values in case of that bankruptcy creditor lawsuits. They love the fact that it's domiciled in Nevada because that asset's now protected in the state of Nevada. Now, what you need to do to sell KaiZen, though, is to have a non-resident license in the state of Nevada, because that policy is ultimately going to be signed by the trust in the state of Nevada.
Awesome. Well, okay. So now let's get into the stress testing, because you do a lot of it and it's impressive. But I'm going to start with the softball question for you.
Sure.
Can I have a negative return?
Can you have a negative? No, not in KaiZen, right? Because that, and by the way, that's a good softball question, but an important one. We would not be able to get access to bank leverage if this was a variable product. If this was a VUL, we wouldn't get. The regulations don't allow for leverage in a VUL, right? The reason we can get the amount of leverage and the leverage we get from our banks is because there's a 0 floor in an IUL. The bank can never lose a dime to the market going below 0, right? So we use IUL for that purpose. And by the way, a lot of people like whole life. We do too. It just doesn't have the same long-term returns that we need to deal with the cost of the money, right? So from our perspective, if it's designed right, we don't have to worry about there is no negatives we have to come out of. We got that 0 floor. The banks love that floor protection that an IUL provides.
Right. So let's say there was a long time period of low performance where you're getting zeros across the board. Will this product still perform?
Yeah. So that you understand, our KaiZen plans had to go through 2 stress tests. We had to prove to the banks, by the way, got to remember, Trent, the bank, their only direct recourse is the life insurance policy, not the client, right? So what do you think the bank wanted to know? Hey, what they wanted to know, what happens if something bad happens, right? Well, the 2 worst case scenarios that we could at least find from a market history perspective was the Great Depression, which would represent 1930 to 1945, and then the high interest rate environment of the 80s, so like 1980 to 1995. Those 2 15-year periods, we tested the plan against those market environments. So in a lower performing interest rate or lower performing environment, that's represented in the Great Depression. That represents 9 zeros in a 15-year period. And our stress test basically shows that there's enough cash value to pay back the loan plus interest and still have distributions in retirement in that market environment. So what we did is asked the carriers, by the way, what did your portfolio look like what would the IUL cap, what would the caps have been in 1930 if you had an IUL, and what were borrowing rates during that period? And we basically benchmarked that time period. Now, why does KaiZen work even in a Great Depression scenario? Because it's unemotional, right? Once the client makes their 5 premiums, the bank continues to fund. And in over a 10-year funding period, as the market was doing zeros and zeros, we just kept feeding it with premium. So when markets came back, which they did, all that premium was in there, and we still had enough to pay back the loan during that time period. If you were only to pay that 5 years or 7 years, or you underfunded, of course it wouldn't work. But these were all max funded during that period. So the amount of years you pay a premium, Trent, really does matter depending on the market environment at which you're funding it. And we found that as long as you fund these with 10 years, no more, no less, that 10-year period is crucial for these to work. Now, in a high interest rate environment, we compared it to the 1980s. Why? Because that was the worst time to borrow money. And that period of time, and I'm going to do this really quick. I hope I can do it justice. In 1980 to 1984, we had borrowing rates of 12 to 16%. But if you and I aren't old enough to remember the early 80s, but the UL policies and whole life policies back then were paying fixed rates of 13 and 14%. Now, that should blow anyone's mind that's at our age range. We haven't seen fixed rates like that ever, right? Now, imagine you having an IUL in 1982, right? And the UL was paying 13% fixed rate. But you had this IUL option like we have now. What do you think the cap rates and the par rates would have had to be to give up a 13% fixed rate for an indexed option?
Right.
The carriers basically told us that caps would have been 25 to 30%. And the participation rates probably would have been around 120 to 140. So imagine, because I'm not giving up 13% unless the upside's basically unlimited, right? So they told us that's what it would have been, 20 to 25% during that period of time. So our stress test said, we're going to only take the cap up to 15%. We're not going to take it up to 25 or 30. We're going to cap it at 15. And that stress test environment, even during those borrowing years, allowed us to pay the loan back plus interest at the end of year 15 and still had some substantial tax-free distributions. Why do we have to remind our clients that high interest rates are not a terrible thing? Higher interest rates or fixed rates give the carriers the ability to give us better caps and pars, right? So it's kind of weird to hear that from a finance guy that says, hey, keep rates a little high, right? Well, we want caps and pars to go up. They correlate. They don't correlate immediately. They take a couple of years to adjust, but higher interest rates gives us better performing opportunities in our IULs and FIAs. So we don't mind a little higher interest rate environment because it gives us a better product in regards to the rate of return that we might achieve. So again, those two environments have been stressed to work in really tough market conditions.
Awesome. Now, you run a lot of stress tests.
Yep.
What are ones that I just don't know to ask about?
One probably is we don't advertise a lot, but after we pay the loan back to the bank, we also stress test to ensure that the policy can withstand 3 zeros in a row after a loan exit. That's probably pretty important, right? We want to make sure the policy stays in force forever. So we never allow the policy to be in a position where it would lapse even in a 3-year consistent zero after a loan exit. So that's one additional stress test that we do on every plan, whether it's KaiZen or traditional financing.
And now 1035 exchange, is that available in KaiZen?
Not in KaiZen. On our traditional business, yes. But KaiZen, the reason why is that to try to actually get a 1035 to go on a particular tranche date would be virtually impossible. Secondly, the carriers don't treat or our lenders don't treat the 1035 as premium. So they're not matching that 1035. So what we suggest is a lot of our clients that have money or cash values that are going into KaiZen, there's not usually a lot of gain It would be better to surrender it. If there's no gain at all, or it's not taxable,
Right.
surrender that policy, use those cash values as a part of the annual premium
Hmm.
to fund the KaiZen plan.
Now, we've talked stress testing, we've talked ideal clients.
Yep.
Looking forward, we
Yep.
have a huge wealth transfer coming up.
Yeah.
I understand you guys have a plan set forward to prepare yourself for this.
Yes. So, like we talked about earlier on, our typical clients 35 to 55 earning $200,000 or more a year, right? That's that qualification. But what about mom and dad who are now 55 and older and they have adult children, maybe in their 20s, early 30s, but they don't financially qualify? Maybe they're making 80,000, 90, but they're not quite there yet. With this program, National Life and Allianz have approved where the adult parent, if they make $200,000 or more a year with a $3 million net worth, that we can use now mom and dad's financials to qualify their adult children that do not financially qualify. So we have cases now where mom and dad, 55 and older, are gifting to their recently graduated son or daughter from college. And the carriers are offering up to $2 million of coverage based off of mom and dad's financials.
Wow.
And so all the kids are doing is applying for KaiZen like anyone would, but whether their W-2s show that they qualify or not is irrelevant. Mom and dad's are what's going to justify it. Mom and dad gift that money to their adult child. They turn around and pay for their KaiZen plan. And now you're setting them up with this incredible benefit that they're going to now get in their 20s and early 30s when most of us wish we could have started.
Right.
There's $84 trillion that's going to be transferred from the next to the next generation over the next 25 years. Wouldn't it be great if a good chunk of that came in the form of benefits or KaiZen?
Now, I'm pretty sure you said it, but I want to highlight this because I think this is going to be huge. You talked about parents. Grandparents can also do this for grandchildren as well.
Yeah, as long as the grandkids are over the age of 8 or 18 and older, then yes, it can be. You can have parents or grandparents be the qualifier financially for that gift.
Right.
It's just that the kids have to be 18 or older, and the reason why is you have to be an adult to sign a trust. You can have a minor signing a legal document. So it's got to be at least 18 years or older.
Okay. That's awesome.
Yep.
Now, we've worked with you guys for a long time.
Yeah.
The agents who have gotten past the learning barrier that we've worked with love the concept. And even those who haven't gone past learning barrier, they love the idea, but they might not have made the move towards selling it or selling a lot of it. And it sounds like you deal with that a lot. And you're starting to put in programs to speed up that learning curve.
Yeah.
What do those look like? And give us a quick run through.
Well, a learning curve prior to ILIA was terrible. So I will tell you, I mean, even the paperwork was even worse. So when we introduced, if you're new to us, we introduced a program called ILIA, the Interactive Learning Information Assistant. This was launched about 3.5 years ago. It is completely different than what the original one looked like back in the day. The quickest way to get ramped up and get involved in this KaiZen program is getting with BGA. BGA is a preferred distribution partner with NIW, and they have access through NIW to this system here called ILIA. And so when you send in your selling agreement to them, we give you access to this, and this will do all of the training, I guess, for us. You can still utilize the BGA team and myself, obviously, but this allows you to go in and look at all of our events, our webinars, all of our marketing tools. We have dozens of client-approved videos that explain how KaiZen works in different market environments, podcasts going over the great wealth transfer, KaiZen specifically. These are customer webinars that Dane and Grace did recently, various podcasts on interest rates, myths of the loan, myth busters of the KaiZen loan, how interest rates affect KaiZen. Guys, this stuff wasn't even available to me when I got involved. So I mean, it's incredible how quickly you can get up and running. There's fireside chats with industry leaders. Every Friday for 10 years straight, we have been doing a webinar Holy crap.
Yeah, you have me beat.
Every Friday, right? So if you miss those Friday webinars, they are reposted here the following Monday. There are literally hundreds in there that you can go over in regards to how to sell, the myths of the loan, everything that you can imagine, marketing kickoff, how to deal with annual reviews, you name it, it's all in here, Trent. It's crazy. We even have social media posts. So if you're into digital marketing and you're trying to find content, we literally have hundreds of social media posts that you can lift, repurpose in your own digital marketing platforms, and for content. Use our stuff, abuse it. I love it. We just use it. It works. This system is very, very robust. We even provide, Trent, the agents with what's called an agent link, so that this link is their own link to a landing page with their picture, their logo, and this link will actually capture leads. And once that person puts their information into that link, it comes into the client management portal as an active lead to call on. So my goodness, I outside of giving you the lead, Trent,
Right.
this system has a lot there for the advisor to utilize to sell and promote KaiZen. Even if you're just not quite sure what to say, in the client presentation, we allow you to go in and utilize the customer portal as a part of your presentation. You can go in here and have them watch the video. They can go in and you can go in and run illustrations with the carrier ledgers. It's all built in there. And something I didn't even have back in the day is a very, very robust FAQ section. So what you could literally, if you spent a couple hours over the next couple months on this platform, you absolutely will be ready to go and sell your first case. Yeah. And the entire application, enrollment, and payment is all done in ILIA. So there's not a single paper wet signature. It's all done right here in the system.
Awesome. Well, that's killer.
A lot to take. Yeah. A lot to take in.
So we have, for term life, we have Vive, and you can do some of that quoting and lead capturing there, but that's a paid program. We have carriers who have campaigns in the boxes that we love them, but they're not as long as what you have. They run for a month and they might have 3 months available at a time. This is both those things easily condensed together, and all the agents need to do is reach out to their brokerage director here and get the selling agreement, and then get that non-resident license in Nevada.
Yeah, so non-resident license, selling agreement, and we get you access to ILIA immediately.
That's pretty easy.
Yeah.
Well, again, thank you for coming on, and for everyone else here, like, follow, subscribe. Our hope is to get to Travis's level with his webinars of having 300 to 1,000 people joining in every week. But we're not there yet. So follow, like, and subscribe so that we can get more people like Travis on, more presidents of companies, more underwriters, regionals, stuff like that. So we can get more of this information to you so that you can increase your sales with something as amazing as KaiZen. So once again, follow, like, and subscribe, and we'll see you next week. Thanks again, Travis.
Thanks, you guys.